Hello, my name is Dennis Carter, financial planner.
Hey, I'm Andy Michael, portfolio manager.
And I'm Matt Parks, financial planner.
Today we want to have a brief discussion with our portfolio team and our financial planning team about the current environment. Andy, I'd like to start with you.
Yeah.
With markets at all-time highs and interest rates also at multi-decade highs, what should investors be thinking about in their portfolios?
Thanks, Dennis. Yeah, that's a good question, and really a question we've been having a lot of conversations with clients about lately. So I think this is a great time to have this discussion.
Yeah.
You know, there's really three big things I think investors should be thinking about in their portfolios right now, given the environment you just said, all-time highs in markets, very, very high interest rates. The first one, and the most important in my opinion, don't be complacent right now. Even though there's a sense of complacency starting to build in the markets, we're seeing markets go up and up, volatility has been down. That's often a time where investors just get very complacent. And I think that's a time you really want to dial in your risk in your portfolio and thinking about how you're invested and why you're invested the way you are. So there's two easy ways to do that. The first one is to know, what is my risk score? That's actually something we can quantify. We can dial in that risk score. We can show clients what that means through various market cycles and really help everyone understand at the same table the type of risk we're taking and why. The second big thing I would say is to think about your assets that are not in the market, those more preservation style assets, you know, conservative bonds, treasuries, corporate bonds, those types of investments. Instead of thinking about them in percentages, think about them in dollars and in years. How much dollars do I have out of the market? How many years could that fund my financial goals or my reserves, my financial goals out of the market? I think that's a better way to think about it than the traditional 60-40 or 70-30. You know, often we'll even see these just very generic target date type investments that just will have that standard, you know, allocation set for the investments, when that doesn't know what the individual actually needs for their portfolio, for their goals. So to just wrap up that thought, don't be complacent, know your risk score, and think about your conservative assets in dollars and years, not percentages.
Great, great. Matt, I'll ask you the same question. From a financial planning perspective, what should clients be thinking about?
Yeah, so I think, you know, with the opportunities that we're seeing here, high markets, high interest rates, a lot of things that we're looking at, but really could break it down into three buckets. One of those for people in retirement, those for the second for those that are almost on the cusp of retirement, you know, within 5 years, and then people who are right in the middle of their working career. So for the folks in retirement, the biggest thing we're looking at is, you know, doing an inflation review. We've had multiple years here where inflation's been very high, and folks are feeling the pinch sometimes, quite honestly. And so just being able to talk through, with markets at highs, with interest rates higher, how can we relieve that? Increasing portfolio distributions, what makes sense there? For folks that are right on the cusp of retirement, really an opportunity to hone in, you know, locking in certainty and locking in confidence in your plan. And dialing down that risk, like Andy, you know, talked about, in order to do that. And so, you know, if you think about 5 years till retirement, well, what if we get a negative market event in that amount of time? It's going to be very difficult to have that conversation, to make changes in the midst of that. We want to be thinking about, you know, that runway is already taken care of. So the last section of that is for folks that are in the middle of their working career. Really an opportunity for them to look at, you know, what their risk, does it match their tolerance for that? Does it match their need for that? And does it match the capacity for that? And really marrying all of those together. So, you know, while you're in your working career and you're able to take more risk, just making sure that what you're taking is in line with what you're going to be comfortable with and able to stay on that ride. Because when the market's down significantly, it's never going to be easy to have that conversation. It needs to happen now while the market's up. So.
Yeah, great. Well, to wrap things up, Andy, are there any specific potential action items for investors to think about in their portfolio?
Yeah, just to give you a couple quick ones. One thing on a smaller scale that we're having some conversations with clients is energy infrastructure. It's a place that we think has been very underinvested for the past decade plus now. Valuations look very, very compelling. global demand for energy is going nowhere but up. So we're going to need all hands on deck. We're going to need clean energy, traditional energy, all sources of energy are going to be needed. So that's one place that we're starting to have some conversations with clients about. The other one is to lock it in. Kind of as Matt talked about, we have these interest rates at multi-decade highs now. So the ability to lock in some of these good yields for years to come, we do think there's some opportunities there that we're having some conversations with clients about.
Great. Well, thank you for the time today,
Yeah,
both
thank
of
you.
you guys, and
Thank you.
thank you for watching. If you have specific questions about your portfolio or would like to review opportunities in your financial plan, please give us a call today. Also, if you are new to Seven Springs Wealth Group, please visit our website at sevenspringswealth.com or give us a call at 615-370-1253.